Welcome everyone. We'll start lesson one. Today lesson will go through LO1. As a couple of you know me, my name is Anju Satan. If you have any question, drop me an email anju@uk.co.uk and I'll try my best to get back to you as soon as possible. Today lesson heavily focus will be on our LO1 learning outcome one. We'll start. Welcome everyone. Before starting our lesson, this will go through what we supposed to be learning next few weeks. So week one, of course, it's good to be looking on the aim of this unit. Will provide you good basic understanding about insurance engagement, and thus which we need to be understand the concept of assurance, define the term of assurance, describe the concept of reasonable assurance, explain the assurance process, and compare contrast the responsibility of different stakeholders. Stakeholders mean anyone who has any interest in the business. That's called stakes. Stake mean interest. So please, that's we'll go through. Of course, then we have the merit criteria and distinction criteria. So please, each lesson will go through one LOs, one learning outcome. So lesson 2 will be tomorrow, which will go through LO2 learning outcome 2. Lesson 3, please, will go through LO3. Lesson 4, LO4, and lesson 5 will be about assignment discussion. Okay, so please, the concept, the key indicative content, what we're supposed to be learning next few weeks, so really we need to be focused on the key concept, which is definition of the concept of assurance, both internal and external, assurance report, so principle, scope of limitation, and different assurance techniques, engagement, acquisition, risk assessment, acceptance of insurance engagement, scope of planning assurance engagement, evidence, evaluation of assurance, and conclusion and reporting and record keeping is very important in insurance engagement. So that's which we will go through in our lesson. So please, if you have any question, drop me an email. I'm at university.co.uk and I'll try my best to get back to you as soon as possible. Let's we'll start this. Okay, so this lesson, please, we'll go through understand the concept of assurance and insurance engagement. So maybe we can think about what's happened with these companies, and that's the importance of insurance engagement is very important. So Enron, World Telecom, Creative Accounting, that's it's a huge and a lot of standard and assurance engagement. The importance of the insurance engagement is significantly increased these year after these scandals. So please, the aim of this unit, which we just mentioned earlier in the unit specification, different stakeholders, they have different and they want insurance engagement. And please, always good to be when you start any activity, always reflect front your knowledge about the assurance engagement, so where we up to. So please, we need to make sure we have a good understanding about the basic knowledge about assurance. So scale 1 to 10. So please, you can reflect how much we know about insurance engagement. Okay, so please, if any question, feel free and ask. Okay, definition about the concept of assurance, which will go through both internal and external report, the indicative content which we have just mentioned. So assurance engagement is a practitioner as account and express the conclusion designed on the degree of the confidence of the internal user other than the responsible party. So the outcome of evaluation. So please remember always, a detail never gave absolute assurance. So we can give the reasonable assurance, it's a high level of assurance, limited assurance is a low level of assurance. And auditor never give the absolute assurance, because the financial statement in line with the accounting standard and with the rules and regulation, and based on, because if we can look around the evidence that has been provided, on the basis of this we can give the assurance in the line of inherent limitation of audit. So please, practitioner, it can be auditors, intended user, it's various shareholders, users, and responsible parties, the managers, and subject matters opinion. So please, we can give the criteria, accounting standard, and legal requirement, inherent limitation, subjective judgment of the director. Director may not give information to the details, and possible the fraud has been concealed, like in case of the And it's in that's the chartered firm. In case of Enron, that's we have the issues with them. So engagement with the practitioner express the conclusion and design to enhance the degree of the confidence of the interested party and the responsible party about the outcome evaluation. Measurement of the subject matters against the criteria international audit and assurance standard board. So guys, please, I just advise you, always good to be look around. It's a book is available, which is F8 of ACC exam, which is audit and assurance. Please, that's quite good to use. And I uploaded, some other books as well. So please, that also help you to enhance your understanding. And if you want to look around, So we discuss about reasonable insurance in high level of the limited is low level of assurance, but never give the absolute assurance. Statutory audit, which is by law, is required, free from the material misstatement and true and fair, financial statement should provide the true and fair, views about the confident decision and knowing that the risk of the information being incorrectly and is reduced. So we have to make sure, please. So assurance increase the confidence and reduce the risk, and for the decision makers they can use. So 5 elements in insurance statement. Intended user about the information and the responsible parties which we can look around, the subject matter is scrutiny, suitable criteria can the judge, the liability, accuracy of the matters and international financial reporting standard and sufficient appropriate, evidence we need to be substantiate, an opinion. So a written report, can be appropriate from. So that's we can look around, that's we need to be in the light of. So the consider someone who is buying a house. So most of the members of the public lack of technical expertise to assess the structure condition, and therefore is a risk that someone pay a large amount of the money to purchase a structural unsafe property, which need to be further expenditures to make it usable. So reduce this risk is normally the house buyer and pay property surveyors and to perform the structural assessment, and then of course we can look around the house, the subject matter, the surveyor maybe give the report back to the written report, and the house buyer identify any structural deficiency and measure again the suitable structural criteria, and then of course information. Potential buyers can make their decision to buy or not. In the case of that, we need to be look around in the light of. So please, that's we need to be. So development of the assurance engagement. So we have to look around the incorporation and separation of the ownership and control, because actually the owner of the company is the shareholders, but the directors and in the public limited company they are agent of the shareholders. So we have to look around the agency relationship and means could the fund invested in the business cannot be held personally responsible satisfying the remaining corporate debts. We have to think about the creation of the limited company referred to, and the creation of the limited company referred to as the incorporation. Incorporation is the following implication: the creation of the legal distance from the owner and the business. That is the key. Business as a separate legal entity in case of the company. Of course, they have the limited liability and they need the managers to be operating on the daily basis in the lineup. While the financial protection for the shareholders that leads to be one of the significant concepts. So we have to look around the shareholders seek to maximize their wealth, but we have to look around the other stakeholders. Nowadays, the very important concept is the stakeholders expectation and power and interest metrics, which we can look around. And for the lesson, please, we need to be look around. So when we say steward, the financial statement provide to directed to be account for their stewardship, because they are not owner of the company, they are agent of the shareholder. So they have to work in the best interest of the shareholder. So we have to align with it. Okay. So please, that's we need to be look around the present and other conflict, the director responsible for paying the financial statement, the benefit of the reporting higher profit. So therefore need to be independent reviews and the financial statement and assurance. Yes. So please, we need to be responsible, take the care about the resources and the steward and the person entrusted with the management and other person and the property. For example, when the person is paid, to look after another person while owner goes abroad on a holiday. So the relationship where the one person has the duty of care toward someone is known as a fiduciary relationship. Thus, we need to be the steward is accountable for the way they carry out his role. The relationship is the good faith, such as director of the company and the shareholders and the separation ownership, the control and the sense of the shareholder. Thus, we need to be look around. Accountability means the people are in a position they can be empowered because maybe they abuse the power. So we need to clearly, that's why the importance of the corporate governance has significantly increased because after the Enron scandal and number of other recently Korean construction company have the issue as well. So accountability is the central the concept of the corporate governance and the process ensuring the company will be well run, look after the details, which we can look around as a chapter in the book as well. The agencies occur when one party is principal and imply another party is the chain and perform the task on behalf of. So that's we mentioned. External audit and internal audit. External audit normally is the compulsory audit for the public limited company and the turnover requirement, which we need to be look around in line with the company's rule and the legislation and in financial reporting standard. So objective of the external auditor's engagement to enable the auditor to be express opinion or the whether the financial statement provide the true and fair and the prepared material, the respect of according to the acceptance financial reporting framework and financial reporting to be applied with the way, the country to country and the general principle to be followed and the auditor also carried out, so ethical principle, International Federation of Accountant, they give the ethics, International Ethics Standard Board and the auditing standard, those we need to be follow as well to make sure assurance is a high level, not just for the sake of, So please, planning and performing and attitude towards, skepticism and recognize, the financial statement being audited. Okay, that's we need to be look around. International Accounting Standard Board, please. Assurance engagement, two types of reasonable, limited, reasonable assurance engagement, which we earlier said, sufficient appropriate evidence is all the material aspect being and the positively worded assurance being. Thus, we need to be and prepare the management, director, shareholders, the details. So because in these, financial statement need to be true and fair in the light of the financial accounting standards. So please, when we look the statutory audit is the example of reasonable insurance assignment in the approach, the assignment must be consistent with the local legislative requirement as well the company act in the UK and the audit will need to be carried out according with the international standard of auditing ISAs. So please, with the greater level of assurance, the auditor can provide the reasonable limitation of audit mean, it is not possible to provide absolute assurance. So please, financial information include the subjective, judgmental, inherent limitation, control, and the audit evidence. So please, representation from the management way have to be relied upon and only the source of the evidence in some areas. So we have to be think about, that's we need to be in the line. Thanks for joining. Welcome. Okay, hope you can hear me, please. Okay, so evidence we need to be always persuasive, not conclusive evidence. And we earlier discussed about the assurance need to be. We never give the absolute assurance, we give the reasonable. And always we can identify the gaps if there are any inconsistencies at the audit report, because after in case of Enron, that's hugely impact the businesses and we need to be make sure there is a gap about the misconception include we believe the editor is 100% transaction the balances test on the sample basis. We do the sampling, but of course, we can't do every transaction, but we need to be detect the fraud. We need to be make sure the opinion being drawn is free from the material misstatement and maybe caused by the fraud of the editor responsible in case of, and which we earlier mentioned in case of the Enron. There is a limited assurance engagement and limited assurance assignment recognize sufficient appropriate evidence, and we have to make sure these evidence criteria and the circumstances should be keep in mind when we're doing the audit purposes and giving assurance. So review the assurance engagement, voluntary analytical procedures. We need to be market, make the inquiries, because third party inquiries, of course, reference and where the asset or revaluation of asset and the asset is where we own, because the financial statement need to be true and fair, and the assurance we are giving reasonable assurance based in the line of, so we are agent of the shareholder and we need to be work in the best interest. Thus, we need to be in the line with the legal and the international accounting standard and audit standard as well. Of course, we can look around the example of the limited assurance. The assignment is the review engagement is possible for the company who is legally required to have a full, audit and they review their financial statement, enable them to be present there accounts to the potential lender. So there is a no precise definition what is being reasonable or limited to the context. We have to be clearly confident and inspired the reasonable assurance report is designed, the gathered that inspired by the limited one. So please, we need to be make sure in the light of the sample what you collected and these the data you've been given or the invoices you've been given, you can give your views. So objective reviews of the financial statement enable editors to be yes, provide all evidence required as an audit and ensure which we need to be anything come to the editor's attention that the cause the editors believe that their financial statement are not prepared financial statement not prepared in the line with the international standard. So we have to think about international accounting standard board standard. We have to practice the review engagement. Thus, we have to be using more limited procedures, secretary audit, which is required by law. So we have to think about. Of course, we can rely if we have the internal audit and doing the company. That's increase the assurance here. So assurance engagement, reasonable assurance secretary, which is compulsory audit and free from the material misstatement and financial statement through the parties. Of course, we can look at agency and the relationship, and then limited assurance and review engagement. That's we need to be look around in the light of the standard which we just mentioned earlier. And please, we need to be greatest level of assurance. Detail must be reasonable, and financial statement include the subjective and the judgment matter inherent and the limitations can be as audit the nature of the work. If you're doing the cash business especially, the huge the risk is involved, then of course your details can be limited assurance. Please, we can look around in the light of evidences of often persuasive and not conclusive. So don't review 100% transaction balances, because it's a very expectation gaps, and we need to be look around in the light of and the accounting standards. So please, in the UK, financial reporting is responsible auditing standard and guarantee. So please, we can look around the quality control, we can look around international accounting standard, ethical standard, practices note, all the key point, international accounting standard board, international federation of accounts on ethical standards. We can, in the light of these, we can draw and give that show that the financial statement is being prepared in the light of. So that's the duty of care. The key things the successful. Please, we need to be the duty of care existed, duty of care enforced at law. Negligence is a situation with the duty of care existed, and the details, over the negligent is performing the duty, and judge, accepted, the professional standard and damages the client has suffered, some of the monetary losses because the direct consequences are the details and the assurance not being giving appropriate, like in case of Enrona. So professional standards are include, the generally acceptable auditing techniques, which will need to be carried out investigation, which will look some standard in the following lesson, and the damages payoff and the bad publicity and bankruptcy and disciplinary action. So we can look around the liability limitation. Please, always, LLP is like it's a limited liability partnership. In that case, and the professional indemnity insurance about this, so we need to be make sure the duty of care without the correct, may not be the case. The key, the issue in the third party, the duty of care is exist. The case law is the and the partial or deed does not hold the third party duty of care. However, the debtor knows the third party is relying on their opinion and does not disclaim liability. So we have to look around in those perspectives and we can draw that. So professional skepticism, what is about an attitude of the critical assessment and the use of the question mind and prevent overlooking so the circumstances and draw incorrect conclusions. So a detail need to be neither assume the management is dishonest and nor fail to the question whether they are honest. So this means the attitude include the being alert the condition, look around the evidence, and then of course documentation is the important notes down and conversation with the client and the staff and the support to provide the evidence to when we draw the conclusion. So ethical standards being the details, and we have these 5 professional code of ethics. Please, we need to be followed in ethical standard. Professional for these are code of conduct. If you're a member of ACCA, IFA, or any other, so please PPCIO, popular people chat in office. If you want to remember it, popular people chat. So first P is the professional behavior. Professional competency, due care, up-to-date knowledge and skill in accounting standard, integrity, we need to be honest, and confidentiality, objectivity. So please, these are all the ethics we need to be make sure and we draw the safeguard, So please, because the threats leads to the compromise the professional code of ethics. So advocacy, self-interest, backend, commission, intimidation, because we have the time shortage, you can't do the further inquiry. So these all leads to familiarity. We know number of years, maybe you overlook the things, and self-review checking. Maybe you was before working in the company and you was doing it, and now you're doing an audit. So that's we need to be make sure that you don't do it. You can ask the other colleagues. And threat of the members in the practice, professional appointment, second opinion, fees, remuneration, that's not in line with the percentage of the savings and things. Marketing gift, use the professional judgment, not accept the gift, because otherwise different personnel providing the non-assurance services, monitoring, resilience are to be an identification of the interest, of the relationship between the members and the firm and the client, disciplinary procedures and safeguard to apply, so we need to identify the risk, independent review, edited working paper, consultation, disclosure, discussion on ethical issues, and notation, that will help to reduce these issues. Okay, so ethical standard, as we mentioned, we need to be make sure we follow the professional code of ethics. Security procedures, we need to be make sure, the securing, don't discuss, the client matters with any third party, don't use the client information for own gain, and don't, audit file unattended, don't, leave the audit cases in the car, and don't take, the working paper away. So these are the key. Either remember of any awarding body will need to be look around either internal and external. Of course, it's not a chartered institute, but they have internal audit purposes is fine. And to ensure, that someone can be mean of the comfort, convenience, and encourage, it's not mean the firm then confirm and audit, the check, example, investigate the review and inspect, scrutiny. So we have to make sure we follow the key, these point, opinion, evidence, and when we look, different, like you're doing the sale audit, you're looking cash audits with these evidence, we need to be in line. So we have a IS 300 details, on the responses, assess the risk which we can identify, which will go through different types of audit risks, inherent risks, audit risks, and self-limitation. These, which we need to be a detail, make your best free from material misstatement and give assurance based on the evidence, not based on. So critical mind, we said, neither the management dishonest, but we can ask, the question, and internal audit papers we can rely on some extent as well, but we need to be crafted. Okay, responses to the risk, please. Test of control and subjective sorry about that. So we can look around the reliabilities of the things, and when you're considering, substantial analytical procedures and audit plan need to be in place, in the light of, otherwise we can't draw the conclusion. Okay, so test of control, please. These are already dealt with, which we'll further go through. I'll give you the book, where we can further look around the different case studies, and that's, help you to enhance our understanding. In the next, the first week, this lesson, we are looking overall views about things, audit assurance, types of assurance. Okay, the control opening effectively and perform the task and controls. So sufficient appropriate audit evidence, control and operate, effectively relevant during the under the audit. Substantial procedures, the audit is seeking assertion made by the directors and knowing the financial statement assertion regarding the transaction that they event. And we need to be make sure, please, the analytical procedures, inquiry, extended confirmation, inspection, observation, we can recalculation or reperformance of the task, to check that is the true and fair the procedures. Analytical procedures, on the other hand, believe the relationship between the item of the data and the relevant information, the company's financial information, similar information for the prior period, anticipating the result if there are the significant is enhanced. So you have to question on what is happening. Is there any material misstatement? So you have to ask the question. So materiality concept we can think about as well. Expected, confirm the pattern link between the financial and non-reliable, relevant, available. So always we need to be risk assessment, and we follow the procedures which will go through the risk assessment in the next lesson as well. Overall, please, which we have the couple of chapters which we can look around the separate analytical procedures in different types of, the audit assurance when we're looking and you're doing the audit fluctuation, unexpected relationship. These, if somebody is not taking the audit work of the firm, that can be a question mark. Why, the detail is this after a certain period of time, consider the management response in the light of the knowledge evidence and carried out additional audit procedures where necessary. So please, payable, purchase, inventory, if the same person doing everything, so it can be a question mark, and we need to be raise, the assurance okay. So different ratios techniques we can use. So please, sampling is very important. The sample size of the population of course, in audit perspective, we can tolerable, misstatement. If it's a 10% difference, we can maybe accept it or not accept it. Statistical sampling, random sampling, probability sampling, or whichever professional judgment can be used. So please always look around, the consider the risk, the expecting the misstatement randomly, systematically. So item equal chance, consistent interval you do, and choosing the bill, but guarding against the bias or maybe your own observation, or we need a detailed must analyze the misstatement, the sample and draw instances of the population, and qualitative expect, misstatement should be considered, and the nature of misstatement balances to be treated against, the whole balanced population. Please, we need to be think about, of course, nowadays, we can think about, if you want to look around the assurance, please, computer audit techniques we can apply, audit software we can look around and aware of things, the test control, checking, whether the system is operating. So maybe we can ask, like, show me the full process from issuing an order to the advice and receiving notes and all. So we can check, the system is clearly, and then we can draw the assurance, accordingly. So please, I included some link for the further reading, and I can share with you the booklet, please, which is available on our Moodle page. So please, I quickly show you on our Moodle page, please. So earlier I went through the unit content, indicative content, what we're supposed to be learn. Today lesson we focus on 1.1, 1.2, 3, 4, and if you want merit criteria, then we embed more examples too. So which we'll go through. And the next lesson will be lesson 2. Please, always each lesson will go through one LOs, which is one learning outcome, and the nature and the importance of internal audit will be the next our topic areas. Please, the following week, the next Saturday, we'll go through the completing audit insurance engagement. and please, understanding the needs of the professional ethics, which will go through. Please, this is indicative content I've given, which will address, and thus we need to be, when we'll prepare assignments, we can refer back to all the lesson slides. Please, you've been given, if you want to look around within, so like sample assignment you've been given, all the materials please given, the standards you've been given, the course book you have, please, it's good to look around, assurance engagement notes if you want, please, and LO1, LO2, so please, you've been given all. So please, if you have any question, feel free and drop me email. In the next lesson tomorrow, please, we'll go through internal audit. And if you have any questions, those are just listening, please drop me email anjum@upil.co.uk. I'll try my best to get back to you as soon as possible. Thanks for attending today. Anyone, any question before we finish, please? Is it everything clear? I hope you can hear me okay. And if any question, drop me email, and hope speak you all, during our second lesson, 2 o'clock tomorrow will be. Thank you. Thanks for attending. Hope you can hear me.
Yeah, thank you.
Thank you. Have a lovely weekend and speak to you tomorrow. Thank you. Bye-bye.